David, thank you very much for taking your time to join the show.
Thank you very much for having me.
You changed your macro view on the U.S. economy on 30 March, specifically this morning Beijing time. Tell us something more about that.
Yeah, no, that's right. We just made this change last night, so you're hearing it here first. We decided that the tariffs that are still coming are probably going to turn out to be larger than we had previously penciled into our forecast. And now, with the April 2nd date looming, we think that the reciprocal tariff is probably going to surprise market expectations to the upside, turn out to be larger. And so we raised our tariff assumption again. We're now penciling in a 15 percentage point increase in the U.S.'s effective tariff rate. On the back of that, we raised our core PCE inflation forecast by another 0.5 percentage point, up to 3.5%. And we lowered our 2025 GDP growth forecast from 1.5% down to 1% on a Q4 basis. These changes really all came on the back of the larger tariff assumption. We just kind of plug in those rules of thumb, and this is where we've landed.
David, Goldman is known for being more bullish on the U.S. economy. So what makes you downgrade the U.S. growth forecast twice in a month?
For the last couple of years, you're absolutely right. In 2023 and 2024, while the recession debate was raging, we had an above consensus GDP growth forecast. And so now we find ourselves for the first time in 2.5 years with a below consensus GDP growth forecast. I think a lot of this comes down to a view on what tariffs are likely to be imposed and what the impact of that is likely to be. I would say aside from the tariff effects, the first quarter GDP tracking data has been fairly weak, so we have downgraded our Q1 assumption. But if we weren't assuming large tariffs, we would probably expect GDP growth to be close to that consensus number of 2.
Given the tariff background, what makes you think differently about the recession possibility in the United States now?
Sure. We recently raised our recession probability. We raised it in a previous step from the historical unconditional average for a 12-month period of 15% up to 20%. And now, on the back of the larger tariff assumption, which has lowered our GDP growth forecast, on the back of a decline in both business and consumer confidence, and on the back of comments from White House officials suggesting that they would be comfortable enduring more economic pain in pursuit of their policies, we have raised our 12-month recession probability from 20% to 35%. The president would always have the option to simply turn back and reverse those policies if the data weaken too much. And comments from White House officials suggest maybe they're less likely to do that than we had previously assumed.
So you mean there is no so-called Trump this time?
What I would say is I think we've learned that this second Trump administration is a bit less cautious on the tariffs than the first Trump administration, a bit more willing to take economic and political risk. They feel strongly about these policies, and they've already acted in a way, I think, that poses greater risks to the economy than in the first administration. This time, they've moved forward with tariffs that are now about 3 to 4 times as large as in the first Trump administration. They haven't differentiated between consumer and non-consumer goods. And of course, public statements from many White House officials have suggested that they are more comfortable with this than we might have assumed on Inauguration Day.
David, let me put my question in this way. Do you believe that the uncertainty this time, the Trump 2.0, will be more pragmatic than Trump 1.0 when it comes to the economy?
I do think that there are greater risks from the uncertainty this time than last time. First trade war was largely a U.S.-China bilateral dispute. This time, I think it is very different. If the Trump administration goes ahead, as we think they will, with a large reciprocal tariff, with a large critical imports tariff, I think many American companies will find that there is an increase in the cost of their inputs. So I think we're seeing this in in business surveys. Measures of business confidence, measures of capital spending expectations have really dropped off very sharply, remarkably quickly. And I think what that reflects is many more American companies than last time do have to worry that they will in some way be affected by these tariffs.
how will the U.S. tariff affect the global economy?
The U.S. is a large export market for many countries. In the short term, I think this will be economically damaging. An important question is going to be how other countries choose to respond to the U.S. tariffs. My assumption would be that most large economies maybe wait and see initially to try to get a sense of whether or not the White House really intends to keep the tariffs in effect for an extended period of time. But if we do get to that point, I think most large economies will retaliate and impose their own tariffs, which would probably mean a little bit of mechanical inflationary pressure offsetting whatever disinflationary pressure you get from a slightly weaker economy. So I think there will be spillover effects. We've downgraded our U.S. growth forecasts, and I think many other countries will also be hit, at least in the near term, by these tariff effects.
What's the impact to China?
I think China has already gone through a lot of this, of course. We've already seen a large decline in U.S. imports coming at least directly from China from the first trade war. Roughly a one-third decline in the U.S. import share from China. So to some degree, Chinese companies have a bit of an advantage over other companies in that they've already been through this. A lot of the production happens in China. Some of it happens in a third country. And from there, the goods are exported to the U.S. Now, for those companies, life might become very complicated because a reciprocal tariff could, in principle, affect many countries. So there might be some additional work to do. But I would actually say Chinese companies might be, they will certainly be affected in the same way as other countries, but maybe they're a little bit more prepared for the possibility that these tariffs will stay in place for a while and kind of better experienced in how to adapt to that.
Some investors in the United States believe that the uncertainties in the United States is peaking. Do you believe so?
I think April 2nd will be a big day. I think we'll learn quite a bit. My guess is that the uncertainty, including about tariff policy and other areas of policy, will remain elevated, though, for at least 2-3 more months through the summer. I don't think we'll know everything there is to be known about tariffs on April 2nd. In particular, I think it will take longer to learn about the critical imports tariff that we still expect, more of a sectoral rather than a country-specific tariff. And of course, April 2nd might turn out to be a day when large tariffs are announced, but there's still a lot of uncertainty about to what degree negotiation with the targeted countries could reduce those tariffs. So I think we're going to learn a lot this week, but I don't think it's going to be over this week. I'll put it that way.